What's up everyone, Brad here with the Money Dad channel. In this video I want to show you some of the stocks that I think could do well in May and going forward, and in general show you how to find the kinds of stocks that have been doing well recently using the FINVIZ stock screener. So if you are someone out there who is just worried that stocks have not been doing well in April, for example, you can see on this TradingView chart, this was the beginning of April right here, this peak right here, and we've just gone pretty much straight down for the entire month of April. So if you're worried about that, if you think that this could continue and you're looking to shake up your portfolio, maybe move some stuff around, look for stocks that have been doing better while the overall stock market has gone down, I'm going to show you how you can do that using the FINVIZ stock screener. I just want to caveat before I get into any of this that I'm not a financial advisor, and this is for purely just entertainment, maybe show you some tools to do your own research. This is how I do things for myself, but definitely no kind of financial advice here. So with that said, let's jump into how to use the FINVIZ stock screener to find stocks that have been doing really well recently, and this is important for the stock market when it's going down. So this will really help you even if you're watching this video a year from now. Granted, it's not going to be April 2022 a year from now, right? It's going to be April 2023, but if we're in a down market, this kind of information will still be helpful. You can use this to find stocks that have been doing well. All right, so let's do that. Let's go to finviz.com and then let's jump into the screener tab right here, and this will bring you to their stock screening tool. So once we're here, we want to look at these tabs right here and click over to technical. Click on that right there, and now you have a new set of options up here, and the very first ones, performance and performance 2, are what we're going to be focusing on today. And using these drop downs, we can look at all stocks in the stock market that have performed to whatever you want to set it to. So you can say today I want to look at stocks that are down more than 15% or up more than 15%, right? Now that is very extreme. That's not common. There's only going to be a few stocks in the entire stock market that are going to meet those criteria, and they're probably going to be really small and volatile stocks. So that's not a great example, but I was just telling you, this is how this works. For this video, we want to look at something a little bit more conservative. Maybe we want to look at, for the month, all stocks that are just up, right? Because we know that for the entire month of April, in general, the stock market has gone straight down, right? So of course, not every single stock has gone straight down. So we want to know, while the stock market has been going down, which stocks have been going up for the month of April. And you can see right here, now that we have clicked that, performance month up, this gives us a list, and there's actually 2,000 stocks in the entire stock market that meet this criteria. So that is a lot to look at. Still way too many, right? I mean, we're not going to sit here and go through 2,000 stocks and look at all the fundamentals and learn about all these companies. It's just too much information. So how do we filter this further down? Well, we can say for the month we want to look at stocks that have done better than 10%. And that will filter it down significantly more. Now you have 351 stocks to look at, which is a lot better. It's still a lot, right? But it's a lot better than 2,000. You can add another piece of criteria here for this to filter out. So you can say we want stocks that have been up more than 10% in the month, and they also have to have been up, let's say, more than 10% for the quarter. Right now you're down to 200 stocks to look at. It's a little bit better, right? So you have these stocks in this list. You have 200 to look at. You have all of these different columns to look at. I'm not interested personally in stocks that are very small for this case, right? For this scenario, I'm thinking about the person who wants to move towards stocks that have done well recently. They're probably trying to get a little bit more conservative with their portfolio. So I'm thinking larger cap stocks. So when I look at this list right here, market cap, and I see $63 million, $63 million sounds like a lot to the average Joe, but for a publicly traded company, that is a very small company, right? Whereas compared to right above it, $12 billion, that's a decent sized company, American Airlines, right? So I want to sort by the market cap. So I'm going to click that button right there, and you'll get some pop-ups if you have the free version, but it's fine. You just click out of them. You're going to click it once, and you're going to get the smallest companies to the top. We don't want that, so we're going to click it a second time, and now you have the largest companies sorted to the top of your list right here. So out of 209, you have the very largest at the top, and you can see some pretty familiar names because these are very large companies, right? Dollar General, Kraft Heinz, Lululemon, Cisco, Twitter, Delta, things like that. So from here, you have a pretty good list. You have filtered it down to companies that have done well in a down market that are very big companies. So from here, you can move on to your next part of your filtering or research or however you want to do it. You may want to go in different directions from here. You may want to look at sectors. Maybe you're more comfortable with airlines, or you're more comfortable with tech or real estate or something like that. Another way to do this is to look at the charts. Or look at the financials. So I'll take, for example, Dollar General. Stock ticker is DG. You can see a quick chart comes up in FINVIZ right there. If you want to just look at that, you can see it's trending up right from the bottom left to the top right. It's a good look. Most of these stocks are going to look like that because we've filtered for that, right? We've said we want them to be going up over the last month and over the last quarter. But you can take that stock ticker, pop over to TradingView, and just type that in, DG, click on it, and take a look at the chart and see. You can start adding some of your technical features onto your chart to see if this fits your criteria. So this one looks a little volatile. It's been chopping up and down a little bit, but certainly over the last let's say middle to late February, it has gone straight up since it kind of bottomed out down there. So that's Dollar General. You can pull up this little tab right here for it and kind of get a quick snapshot of their financials. The revenue looks like it is increasing significantly over the years. Profit margins are not bad for a brick and mortar store. They're actually pretty decent, but they are in that brick and mortar retail store kind of area of 1 to 10%. It is profitable, which is great. But you're not going to get blown away by the profit margins on a brick and mortar retail store, right? You pop over to the quarterlies and see revenue is kind of stagnated a little bit, and so has the profit margin, but it's consistent, right? At least it's consistent. It's bringing in profits, and it's been doing well in a down market. That's the key here. We're looking for stocks that have been doing well, have been going up while the overall stock market has been going down. So that's just one example. I'm not suggesting Dollar General is the stock to buy right now by any means. I just use that as an example because it was at the top of the list, and you can continue down. Kraft Heinz, KHC, go over here, type it in, and you can do this with all of these stocks, right? So you can see the trend has been up lately after it bottomed out. Looks like it bottomed out beginning of December or late November. It's been trending up, right? So maybe this is a play on getting back, the world kind of just getting back to, buying things in stores and buying, their groceries and things like that. I don't know. Kraft Heinz, maybe that's a play on, prices have been going up with inflation, right? So maybe they're making more money that way. Not quite sure there. I'm just throwing out ideas. But one of the reasons, now that I'm speaking of inflation, one of the big reasons that I wanted to look at higher market cap companies, something that I didn't mention earlier, is one more thing, was the inflation rate in the United States. This is something that I wanted to talk about as inflation is going higher, and it is very high right now. We're at 8.5% as of the last official reading of that, right? 8.5% is just crazy high. You can see on this chart, it's been going straight up. As inflation goes higher, you want to be looking at larger companies and more profitable companies, because the smaller companies and companies that are not profitable have to use debt to finance their operations, and the interest rate on that debt is going to get more expensive as inflation rates and interest rates go up, right? More right? We're talking more about interest rates there, but they're almost hand in hand. So when you're looking for companies in high inflation and high interest rate eras, in my opinion, you want to be looking at profitable companies and larger companies because they don't rely as much on debt to finance their operations, right? They don't rely on it. They can get away from it and just kind of, finance their operations through their own margins, right? So if you're looking at smaller companies, they're going to get beat up more in this stock market, right? You can see the small cap index has been heading down, and a large reason for that is because interest rates and inflation have been going up, and it makes it difficult for those smaller companies who rely on debt to kind of be profitable or just keep moving along. It's just more difficult because the interest rate on that debt is higher, right? So that's what I've got for this video, guys. Please let me know what you thought of it down in the comments. If you got some value out of it, please hit that like button. If you're not a subscriber yet, hit that subscribe button. I do videos just like this, these kind of tutorials on FINVIZ and TradingView. Most of my videos, somehow centered around stock market type stuff. I do some technical analysis videos, stock chart patterns in TradingView from time to time. So if you're interested in any of that stuff, please like and subscribe to the video. Thanks, guys. I'll see you in the next one.